What is going on, investors? Back again. This time we're taking a look at Plug Power, kind of a micro cap speculative stock here, ticker symbol plug. This is by request. I got a lot of people asking me about this one. Took a look on YouTube. There's obviously several videos. I would encourage you to check them out. Most of them are going to take you through the company line, which is typically the website, all the great things that this company is going to do, what they've accomplished, what they're going to accomplish, almost like it's a fact. And while it could be a fact, this company could end up doing all the stuff it says it's going to do. I'm going to take you behind the curtain a little bit. We'll take a look at the most recent earnings report that were reported today. The stock really rallied pretty hard on the news, about up 15% on heavy volume too. Today we had 72 million shares traded. Average volume is about 21 million. So heavily traded today. Investors obviously liked what they saw inside here. A $3 billion company, $3.5 billion company after today's rally. They reaffirmed some guidance where they said that they were going to make about $2 billion, I think a year or two from now. That's on the top line. And so we'll see about that. But let's jump into some of the other stuff that no one's going to talk about here on YouTube typically. But if you get into more sophisticated investor circles, this is the stuff that they're going to dig into and really start to calculate and really decide if this is a stock that they want to buy or if this is a stock they want to sell. Finally, we'll jump into the chart here. We see this chart the stock was in a defined downtrend, but it's kind of gapped up here. So we'll see if there's a price where we can get this at. Again, $3.5 billion valuation, huge pop today on earnings, as you can see with this stock chart here. Still a pretty low price stock. I think that's what's attracting maybe some of the quote unquote Robin Hood investors and things like that. This is a pretty quote unquote cheap stock. Typically, I do not buy stocks under, I would say even like $25 a share, but maybe we can make an exception here. I would encourage you to come to their website, figure out what they do, figure out what they're doing. They just bought a couple companies. They're kind of vertically integrating their systems here. They're making stuff for forklifts and other types of vehicles. And I actually think it's kind of interesting. But again, you can find plenty of quote unquote investor YouTube channels that are going to tell you about this stuff. You come here to actually learn something. So before we jump into the numbers, which I think are really interesting, I want to show you a couple things first. First thing is first, on May 6th, this company basically amended a loan agreement. So they have a loan agreement with about $157 million outstanding. Now, none of this is super alarming. Young companies like this and plenty of companies out there have plenty of debt. But I want to show you what they're borrowing this money at. Take a look at the interest rate from 9.5% from 12. So they were borrowing money at 12% and it went down to 9.5%. Okay, that should, as an investor, that should ring a few alarm bells considering how cheap money is. Okay, think about what a mortgage is. I know this is not a mortgage. Think about what Amazon and Apple, and I know we're taking the creme de la creme of companies. Those companies borrow at like 1 or 2%. Think about a credit card. I actually have credit cards that have lower interest rate than this. I have a business that I run on Amazon. Amazon lends me money at an interest rate, I think it's close to 5 or 6%. This company is borrowing at 9.5%. That is showing you that the bank has seen all the documents Plug Power has, all the sunshines and roses that they present to you as an investor, and they're still charging them 9.5% in a zero rate environment. Again, not saying this is a huge negative or this is going to be just draining the company out of finances, but it is going to be a drain a little bit on the company finances. Money is going to have to go out the door to pay this 9.5% interest rate, but it just shows you that this company is speculative. You know, most healthy companies are borrowing at a rate lower than a mortgage right now. This company is borrowing at like 3 times the mortgage rate. That should just give you an idea on how risky a bank thinks this is. The other thing that's kind of interesting, $75 million stock. Anytime you see this is not necessarily a good thing, okay? So they entered an at-the-market issuance sales agreement. So this is called an ATM. I actually just did a video where I talked about this. Basically, this company has an agreement with this BF Riley Incorporated to where it says here, from time to time, they can make sales of the company. And when they agreed on this, the stock was at $3.82 a share. Now, obviously, the shares have appreciated quite a bit. Now, they're going to pay a 3% gross sales price commission to this company. So that's a great business. I'd love to be in that business. Forget Plug Power. Let's get into this business where we can just issue shares and make 3%. So anyways, but they're basically issuing up to $75 million worth of stock. That is something that you want to keep in mind, okay? We'll get into the financials here in a minute, and I'll show you the dilution, okay? This is real. This dilution is real, and it's something that you want to be mindful of as a shareholder. Now, probably the most interesting part here is I've got insider trades. This is Plug insider activity here. Take a look. Number of shares bought over the last 3 months, 96,000 shares. Number of shares bought over the 12 months, I'll call that $2 million in shares. Sounds like a lot, right? We'll take a look at the number of shares sold over the last 3 months. Insiders, these are executives. These are board members. These are people well connected with the company. What are they doing? They sold 4.6 million shares. Take a look over here over 12 months. They've sold 8.8 million shares. So while you're sitting there super excited about this company, guess what the executives are doing? They're dumping these shares off as fast as they freaking can. So that's just another, again, this is not necessarily something that's untypical. These executives have to get paid in some way. And when you become an executive, you need a nice car, you need a nice house, you need a nice Rolex. These types of things I get, okay? But just understand that the executives of these companies are not net buying shares. In fact, they're net getting rid of them almost at a 4-to-1 clip on both the 3-month and the 12-month basis. That's just something you want to keep in mind. The executives of these companies are getting rid of these shares at a 4-to-1 clip. Let's move into the financials, guys. 3 months ended here. These were just reported. Like I said, this popped the stock like 15%. So let's see what investors saw here. 3 months ended here, 6 months ended here, 2020 here, 2019, same over here. So they've got this sale of fuel cell systems and related infrastructure. We went from 30, call it 39, up to 40, call it 48. Okay, that's not bad. Let's take a look at the gross margin on this business, since this is by far the largest business of the group here. These other ones don't even add up to this one. So I'm going to pay close attention to this. We paid 33. Here's our cost of revenue down here. We paid 33.6 to make 47. I'm not going to say that's stellar margin, but maybe in this business, in this kind of business line, it is similar margins. So we saw similar margins here. For the 6 month ended, we spent 47.4 to make 68 million. That's not bad. And if they keep growing this top line like this, and they can keep this cost of revenue at the same, it could develop into a fairly large business. We see over 6 months here, we did $108 million worth of revenue. Again, you want to annualize this out, maybe give them a little credit for a little bit more. We'll just give them 250. Okay, not completely out of whack from a price to sales. Okay, I know it's still an astronomical number here. We're still quite a big price to sales, and they don't have a price to earnings because they don't make any money yet, but it's not completely out of whack. Okay, this is not like some of these other companies that I've looked into recently, like a Nikola and a Virgin Galactic, where these companies basically have no revenue and they have billion-dollar valuations. At least this company has got something. I want to point out some other stuff here going on though. So we see here on this services performed on the fuel system. So they spent 14.7 to make 12.7. So they actually lost money on that business model. We've got power purchase agreements here. They spent, call that 28 to make 13. So they lost actually a lot of money in that. And then finally, we've got fuel delivered to customers. We spent 18 million to make 14 million. Gosh, they're basically giving this fuel away for free. So as we can see here, we've got net revenue here for 6 months. That's at 109, and we spent 109 basically, or 108. We made barely any gross profit here. We made 600. That's $605,000. I know people, including myself, that actually make more than this. Maybe not in 6 months, but you can pull this in a year, not working that particularly hard, especially out here in California. So it's not great, and in fact, it doesn't compare very favorably comparatively to the previous period, both on the 6-month basis and the 3-month basis. So these costs have gone up for some reason. These costs down here have gone up, even though these revenue numbers have all ticked positive, or at least ticked a little bit higher from where they were. So they're either trying to be a loss leader, they're trying to gain market share by maybe squeezing out other competitors. That's possible. Or they're just not really reached scale yet, which is probably definitely a fact. But they're willing to lose money over the next 6 months, 12 months, because investors are kind of giving them that leeway in order to build this business. Now, you got to hope that it turns the corner at some point as an investor, and those are things that you got to think about. Now, these aren't the only expenses, okay? We got research and development, we got SG&A, and so we've got total operating expenses down here on the 6-month. So we've got our 2020 view, 6-month, we spent $53 million. Again, you minus that from the 605 that we quote unquote made, and boom, we've got an operating loss here of $52 million. That is $20 million more than the previous period, and it is looking like it's holding true for the 3 months. In fact, we went up to a $15 million loss at our run rate. This was 20, so if it accelerates, you might get closer to 30 over the next 6 months. That's not necessarily a great thing. Interest expense, I talked about that, okay? Look at this interest expense, guys. Holy cow, $24 million. This is a company, again, that made 108, that's cost of revenue. We made 605,000. Let's just go net revenue. Just net revenue. They're paying about, what is that? About 25% just in interest rates, okay? They made $108 million in total revenue, and they had to pay the bank close to $25 million. Okay, the banks and the lenders and the private secured shareholders of this company is squeezing this company's neck. Okay, that's what I want you to understand about these slim traded micro cap kind of startup companies. What ends up happening is the preferred shareholders, the senior note holders, and the banks squeeze these companies' necks to death. Okay, and so they don't make a lot of money while the banks just clean up. I mean, they just made a bunch of money off this company. So finally, coming down to the most important thing is you need to see the dilution. Here's the previous 6 months. We had 225 million shares. Now, boom, all the way up to $310 million a share. That might give you an indication of why the insiders are dumping these shares off, is because they're printing them like the Federal Reserve is printing dollar bills right now. So it's not necessarily that good of, not really that great of an operation statement. But again, if they're building their business, they're building it up, I'll give them a pass on a lot of that stuff. We got $48 million in cash flow in the previous period, and we're ticked all the way up to about $111 million in cash flow in this quarter. Obviously, this is not good because this is in the negative direction. So cash is flowing out of this business from an operating perspective, an investing perspective as well. Notice this net cash paid for acquisition. So they acquired a bunch of companies that cost them $45 million. Again, they're financing a lot of these acquisitions through debt, through issuance of shares, which cost even more than what this price tells you. And so $56 million flowed out of the business there. Now, the financing activities down here, we see proceeds from long-term debt. So we have the $49 million here, increase in finance obligations here. We've got proceeds from exercise of stock options. We've got proceeds from issuance of convertible notes, things like this. This company is in fundraising mode. As you see here, the vast majority of the cash that flowed into this company came from these financing activities, options, convertible notes, debt, these types of things, because the company is not really making any money. Let's zoom up here to the balance sheet, see how well capitalized this company is. They do have that at the money agreement, so I assume they've either tapped that all out or they can keep tapping that. As we see here, year ended, we were here. Now we're 6 months later. We have ticked up nicely here with the cash. We've got some restricted cash. We'll call that about 200 million. We've got accounts receivable has ticked up nicely as well. Hopefully that includes maybe not a lot of doubtful accounts as well. We've got plenty of inventory as well. Everything looks fine from the asset side. Things look pretty good to me. It's not overly weighted in this goodwill. Sometimes like goodwill and like intangible assets. I know this is 100 million, but they have more in cash than they have in this goodwill and intangible assets, which is sometimes the reverse. You'll see with some of these like thinly traded kind of quote unquote penny stocks, they'll have almost all their assets will be in quote unquote goodwill and intangible assets, where they don't have that here, although it's ticked up pretty nicely over just the last year, mainly because they did an acquisition, a pretty big acquisition actually. So finally, let's take a look here. We got long-term debt down here, guys. What's this number? Oh my goodness, 101 million. And then we got 142 million in these convertible notes. Okay, we got other finance. What's this finance obligation? That's 300 million. Man, that's a lot. So we've got a lot of liabilities. Let's take a look at the current portion of long-term debt, 50 million. So yeah, I told you they had a lot of cash, but they don't have anywhere close to take a look at total current liabilities here, $208 million. These are liabilities. This is like your credit card. This is your mortgage. This is your car payment. This is your, these are the bills that are due for you very soon, like in the next 6 to 12 months. And they have $208 million of them, and they have about $152 million plus 50. They have barely enough in the bank right now to cover just these liabilities. Okay, let alone run the rest of the business and keep the lights on. So obviously this company is going to continue to be in fundraising mode. And so in my opinion, that's going to create a lot of pressure on Sears. We've seen these shares have gapped up before. Okay, we have a gap. There's been some momentum, but then there's this stretch of time. This is pretty heavy volume too. If you look down here, there's a period of time where these shares sell off. This is the company selling shares, executive selling shares, company fundraising. They are, it is going to keep a lid on this stock. Okay, I know it popped up today, and this is great. Everybody that had shares of this should feel good, and if you made some money, that's great. But what you need to understand is, with all the fundraising that this company needs to do, the fact that they're borrowing money at 9%, okay, they're going to try to issue as many shares as they possibly can, because that is the cheapest form of fundraising they can possibly do. But they have to be careful because they have these senior notes. They have other investors in here that are senior to you, the common shareholders. So they got to be careful not to dilute those guys without any kind of agreement that they have with them. So personally, I would wait. We have this huge gap up here. I personally think this stock, who knows what it's going to do? There's all kinds of stuff happening in the market, but we had this big candle that ticked this all the way up to 1145, and then it came all the way back down here to closer to where we topped out back here. And so I think this stock is likely to hover in this range. Okay, I don't know, what it's going to do. Quite frankly, I don't exactly know where it's going to trade, but I would imagine we're going to trade. This stock is going to start trading in a box here at some point. Okay, so we're going to find a range somewhere here with this stock. I know it's gapped up above this range, and it might stay up here at $10. But for this stock to make this next leg forward with all the dilution, all the executives that are selling shares, all the insider selling, all the convertible notes that they have, all this stuff is going to keep a lid on this stock. And I've seen it time and time again. Okay, I'm saying this not just from analyzing Plug. I have analyzed tons and tons of these small micro cap up and coming stocks. It happens time and time again that they hit their head up against kind of the dilution window, and the executives kind of selling their shares because, like I said, those guys want fancy cars. Those guys want fancy houses. Okay, they're in the executive club. They need to have a fancy suit and things like that. So they've got to sell their shares and make some money and buy the finer things in life. So this stock, in my opinion, is probably going to come back down into this range. Now, this company did reaffirm some guidance where they said, I think they were going to do $2.5 billion within the next, 2 years. And so to me, $2.5 billion of sales with a $3.5 billion market cap, off the top of my head, doesn't sound too bad. Now, if they can clean up the margins a little bit, if we can clean this up and get some better, squeeze some better margins, not necessarily out of these businesses, it's possible these are all kind of loss leader to drive this top line. I totally don't mind that, and that's totally something acceptable, but we need to start growing this top line really aggressively. I know it grew 11 million year over year, and it looks like we grew 27 million over the last 6 months. That growth rate needs to continue. If that starts slowing down as a percentage of revenues, I'd be a little concerned, but it does look like it's accelerated nicely, because for the 6-month period here, we did a 108, and if you annualize this out, give them credit for maybe 70 million in the next quarter. Well, now we're growing pretty nice over the last 6 months over the previous period. So, this is one of those stocks where you've got to be careful on your allocation. If you want to buy this stock, I would do all the research that I did. Come in here and try to find a level that you're going to buy this at, but allocate yourself appropriately to this stock. If you have $1,000 portfolio, personally, if you're a young guy, maybe 10 shares of this is about what I would do, and you can scale that up the larger your portfolio. For me personally, I've got a portfolio quite a bit larger than that. Personally, if I wanted to come in here and buy shares, I wouldn't buy more than maybe 50 of these things, and it would be on a total flyer. It'd be total speculation. I'd probably put a stop loss under these as well, probably somewhere in the $6 to $7 range, because if these shares break here, we've got one candle here. If this breaks here, we've got one area of supply here where you probably don't have a ton of buyers. This thing's going to drop all the way to $6. If it breaks this $7 range, the odds of it coming all the way down to $6 and kind of hitting its head here and hitting its hair is very, very high. So if I bought shares of this anywhere above $7, maybe in this $8 range or something like that, I would definitely put a stop loss here just so I didn't lose all my money. That's another thing with these penny stocks. Just don't lose all your money. You could get reverse split out of this one. I say this because I've had it happen to me. I've bought speculative companies like this, and I've gotten reverse split to death. I've gotten just diluted to death, where I end up with basically nothing. I bought 50 shares and now I have 1 share. So that kind of stuff can definitely happen with this. And don't believe everything that comes out of the mouth of these executives. They are selling their shares as fast as they possibly can. So of course they're going to tell you it's sunshines and roses. It's like reading a dating profile. The girl's not going to tell you she's been divorced 3 times and she has a restraining order and all this other stuff. She's going to tell you how great she is and how wonderful she is and how she goes to the beach and she likes to make dinner. She's not going to tell you all the bad stuff about her. And so that's what these executives are doing. They're basically giving you like their dating profile whenever they talk about the company. Dig into it, look at it with a level of skepticism, and just understand that these stocks can go up very quickly, but they can come down very quickly. As we see here, it went from $10 down to $7 this is a matter of weeks. Okay, you've lost 30%. If you bought here and you were here, you lost 30%. Now you're back up. That's great, but chances are this thing's going to come back down, and it might come back down even harder. So that's what you want to understand with these micro cap stocks. So hopefully I don't want to scare anybody off these things. It's a $10 stock. It's not that big of a deal, but you just want to do your research and fully investigate these things before you jump in, and you don't want to over allocate. I get way too many comments on my feed saying I got a bunch of shares of Nikola. I'm overweight Virgin Galactic. I'm overweight some $4 penny stock. And it's like, what are you thinking? Amazon, Netflix, Facebook, Google, Apple, Microsoft. These stocks are up 100%. Get fully allocated to those stocks before you start jumping around and messing around with this stuff. That would be my opinion. Hopefully you guys enjoyed this one. We'll be back with more videos all this week. I think we got in video to tomorrow. I'm really excited about that one. And we got more this weekend as well. Thanks for everybody that has subscribed. I think I'm up over 17,000 subscribers. Just want to send a heartfelt thank you to everybody. So thanks for tuning in. We'll be back soon. Good luck with your investments.